Why is Donald Trump's tweeting such a risk in 2017?
Well, I mean, I made that remark, somewhat tongue-in-cheek, but we've already seen that Trump's tweets can knock value off of companies' share price, change corporate operations planning, and also change what members of Congress do. And the reason why I said that it was among the biggest global political risks is because if political risk in the best of times is difficult to price, this is an entirely unfiltered and new mechanism.
Are market surprises and accidents just waiting to happen, Tina? How long before what you would term an accident or a surprise really comes to the fore?
Well, in terms of one that moves markets, we haven't seen that yet, right? Most of the moves that Trump has made in his first week in office and the executive orders, which have certainly rocked public opinion, generated huge protests and everything else, haven't affected what investors and companies are most focused on from this administration. So, we haven't changed our views on expectations of growth, of deregulation and everything else. But political risk is defined by where there is a disconnect between the politics and the economics, and that's very much what we are observing right now.
We have a bunch of CEOs from a particular industry that get invited to the Oval Office and come out and make very positive comments. And then we get, tweets that X company is keeping or creating jobs in the United States. Is this how government is supposed to work?
Well, it certainly isn't how government has typically worked in the past. And furthermore, what we have is clearly a real mix of developments, right? Some of which are clearly market friendly and business friendly. But the overall operating environment is one that is going to be characterized quite clearly by uncertainty. And some would argue that that is in itself is a strategy by the administration to keep people on their toes, to keep those CEOs coming. And wanting to stay in good stead with this administration. That's not normally how we do things.
How do you score for all this when you're trying to figure out how the economy is going to fare over the next 12 to 24 months, Tina? I mean, you have these announcements. Do they really mean anything to economic fundamentals at the end of the day?
So far, they don't. I think where things really start to get more complicated is in the event that some of these developments are challenged in court, that the president's executive orders aren't executable, that reforms like for Obamacare and others take longer than expected. In that sense, markets have gotten ahead of a political process that just takes time. And then there is the risk, as we saw as Trump took office, prediction markets suggested a 50% probability he wouldn't finish his first term. And so investors will also be looking for the possibility that some of these developments are not presidential.
Tina, how do you think European investors are pricing political risk? How do you gauge the political risk premium ahead of the key events to come this year? German, French, Dutch elections, could be more, could be Italy as well. Look what's happening in Greece. Greece is still to agree on, the latest bailout review. How do you think risk is being priced in Europe right now ahead of these key events?
Well, we've said that Europe is really in the crosshairs of much of these political risk developments between Trump and even just possibility and changes of trade and other types of engagement, and with Brexit ongoing through 2017 and beyond, plus all the European elections that you mentioned. So investors are very aware that political risks are higher, but at the same time, stock market performance is not much affected. And really, as ever, all eyes are on the Fed. So I think there's not enough information for investors to change their strategy, but the sense of precariousness due to more actors and more volatility is quite apparent.